Hello, and welcome to myfinanceteacher.org. I'm happy that you are with us, and if you are a new member, over the next couple of days I will send you an email confirmation for new post alerts so that you don't have to check whether there are any new posts on my website. If I or my colleague posts anything new on the website, you will get an email notification. And now let's go through the market update, and we're going to start with the S&P 500. I think over the last several days, S&P 500 has started the decline into its short-term daily cycle that has been going on so far for about a month, for 29 days. Possibly this recent top that we saw, that's on the 8th of June, is not only the top for this short-term daily cycle that will probably last for a couple of months, it's also possible that this is the top for the intermediate term cycle, which usually lasts for about half a year. So as this cycle continues down over the next couple of weeks and gives us the short-term cycle low, possibly poking through the lower range of the Bollinger Bands a few times, and as we enter into the rallying phase of the next short-term daily cycle, I think there is a good chance that the top of that next short-term daily cycle might not break above the recent high. And the reason for that is that by the time we get into that later stage of the next short-term daily cycle, the ongoing intermediate cycle will probably be relatively old already, lasting for quite a few months. So it will be kind of due for an intermediate cycle decline into the intermediate cycle low. So that's a projection over the next few months. For now, though, I think we still have to poke through the lower range of the Bollinger Bands a couple of times, having poked through the upper range of the Bollinger Bands quite a few multiple times. That's over the last few weeks. Talking about the shorter term cycle, these usually last for about a couple of months. So the ongoing one, having only been going on for 29 days, I think we still have at least a couple of weeks of possibly downward momentum in the general stock market. And looking at the futures before the US markets open, looks like futures also suggest that we might at least start the day down and possibly even continue down throughout the day. We'll have to see about that. Next, looking at some indicators in relation to the general stock market to see if they agree with our expectation of a possible cool down. First, looking at American Association of Individual Investors, the bull ratio says that under 50% of individual investors are bullish at the moment. Usually these individual investors are on the wrong side of the market, as we saw here, for example, in December 2018, here in the middle of 2019, during the summer, as well as in September of 2019, where the bearishness of individual investors actually coincided with the lows. That was the time to buy. And more recently, we saw a bit of a lag in the bearishness of individual investors. So with that in mind, this indicator at the moment doesn't actually show much, because a ratio of under 50, only 47.4, would actually tell you that there is still potential for stock prices to go higher and entice more of these individual investors into buying the top of the market. So I can't really see much on this chart to suggest if the stock markets are turning around and going to go down over the next couple of weeks. But as this is updated weekly, possibly we haven't seen the effect of the few days decline yet. Next, looking at the dumb money confidence, we see that with the recent decline, dumb money has lost some confidence, but overall they're still pretty confident. So it's too early to jump back into the stock market. As you see, dumb money are usually also on the wrong side of the market, and you probably want to wait until this index drops at least under 0.5 before you consider buying again. Although, of course, there's no guarantee the stock markets don't continue higher from here, as it happened here, for example, in the first half of 2019. Bit of a drop in dumb money confidence, followed by higher stock markets, and eventually higher confidence into extreme confidence at the very top. Next, looking at smart money confidence, these are usually on the right side of the market, as we see from the recent lows this year, and for example, from the lows in December 2018. Smart money confidence is still under 0.5, so you probably want to wait until this index reaches at least 0.6 or higher before you want to consider jumping into the markets again. Next, looking at gold. Unfortunately, we see that gold is feeling sick today, a relatively big red candle, and it's dipped below the 50-day moving average, all within one day today. If this decline continues over the next few days, there is a chance that gold might give us a lower low compared to what we saw on the 5th of June, and that might possibly give us a correct short-term daily cycle low with a more usual duration of 49 days rather than 35 days based on the 5th of June low so far. And if that happens, that would actually agree with the comment I received on YouTube about the head and shoulders formation on the daily chart of gold. Thanks, James, for this comment. I think James is referring to this bit of extended shoulders, both on the left and on the right hand side. So we'll have to see how it plays out. But unfortunately, I think it's more likely that we're going to see lower gold price over the next few days rather than higher gold price. Part of the reason why I think so is the duration of this short-term daily cycle. If we see a cycle in another 1 or 2 weeks, that would give us a more usual duration of about 1.5 to 2 months. And that would also unfortunately mean that the chances of testing 1800 within the ongoing intermediate cycle might become relatively slim, because if we're going to see gold decline for another 1 or 2 weeks, that would give us an intermediate cycle low lasting for over 3 months already, meaning that the bounce into the third short-term daily cycle might be a relatively weak one, as it will be time for an intermediate cycle decline in general. Looking at optimism index for gold, recently a few days back at the beginning of June, optimism was deep enough for a cycle low according to what's been going on in gold over the last year or so, but according to a longer duration, according to what's been going on to gold for the last couple of years, the recent drop in optimism on gold is nowhere near enough for even a short-term daily cycle low. So there's a good chance gold might continue down for another few days, and this optimism index possibly touching the neutral level, say at about 50, before we enter into the rallying stage of the next short-term daily cycle. And looking at GDX, with gold giving us a red candle today already before the US markets are open, unfortunately it's quite likely that today GDX will come very close to my stop loss, or maybe even trigger my stop loss, which is, as far as I remember, at about 31.6 on GDX. However, there is just a bit of a chance that today GDX just retests this breakout at about $32 and bounces back up. That's why my stop loss is just under that at 31.6. Oops, a bit of a correction here. My memory was a bit wrong. My stop loss is at 31.3, as you see from my post at myfinanceteacher.org. Still, if GDX is below this breakout level and even below the recent low on the 5th of June, that if we see GDX below that, there's a good chance GDX will continue down to close some of the recent gaps. In either case, so far so good. We've had nice profits all the way since late March, and even if we are stopped out, there will be a nice chance to re-enter 1 or 2 weeks later. Looking at silver, there is a similar situation here. If silver drops below this 200-day moving average, there is a good chance of a continued decline until we see a few pokes through the lower range of the Bollinger Bands, maybe a retest of the 50-day moving average before the bounce into the next short-term daily cycle. Looking at silver optimism index, as you see, it's still a little bit high at about 48, and the recent low that we saw in early May dropped the silver optimism index down to 40. So another few days down to bring this index a little bit lower is quite possible on silver. But personally, I am still holding 57% allocation to a range of different assets related to precious metals. So today and tomorrow I'll be just curious to see if the stop losses are going to be triggered. In either way, I will let you know at myfinanceteacher.org. Next, looking at crude oil, this cycle has been going on for 56 days already. Usually these short-term cycles in crude oil last for about a couple of months, although sometimes they're very tricky to find. It's a little bit easier to find the intermediate cycles on crude oil. In either case, 14-day RSI has been relatively close to the oversold level, so a trip down to at least the lower range of the Bollinger Bands over the next several days is quite likely. Possibly over the next couple of weeks, crude oil might even retest the 50-day moving average. If that happens, I think there will be a nice re-entry opportunity with XLE. We're going to talk about XLE in a moment. Next, looking at crude oil optimism index. This chart agrees with the price chart as well. We see that optimism on crude oil is still relatively high, so although it hasn't reached extremely optimistic levels, So there is still a chance for a last push up in crude oil price. But still, you probably don't want to risk it at this moment, as optimism has been close enough to extreme levels. And a nicer re-entry will be when this level reaches somewhere below 40, somewhere close to 30 would be even better. So looking at XLE, this is energy ETF. As the general stock market possibly cools down over the next couple of weeks, and as crude oil cools down as well, both of these, lower stock market and lower crude oil, are likely to push the XLE down. Again, at least down to the lower range of the Bollinger Bands. If I see a few pokes through that low range, then I think there might be an interesting opportunity to re-enter this trade. If that happens, I'll keep you posted at myfinancesteacher.org. That's all from me for now. I wish you a very nice day. Let me thank you again for being a member at myfinancesteacher.org, and good luck in your trades.